What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to break down some very important information about SPY and talk about what's going on with the technicals. I'm going to keep this video very brief and break down what's going on with the economic data too, and next week for the markets. Before I begin thinking about all this information though, let me just mention a couple of things. Firstly, I am not a financial planner, so take none of this as financial advice. And don't forget about the Moomoo link, which is down below and in the description. If you sign up for Moomoo, deposit $100, you're guaranteed 5 free stocks and a $100 cash reward. The offer ends in just about 10 hours, so check it out before they run out. With that out of the way, let's get on with the video. All right, so for the economic data, just as a reminder, the PCE data report that came out was pretty decent. Everything was as expected or lower than expected, even on the core side. The PMI report did show a declining economy, but it wasn't too horrible. And besides that, the inflationary expectations are still showing some expectations for a decline in inflation over the next couple of years. Things are looking pretty decent so far in terms of the data, and that's why the market has been holding up quite nicely. And it's also because of the fact that we are at the very end of the quarter, the end of the month, and the end of this first half of the year, and the market held up quite nicely. However, I just want to note that despite the market pumping like this and getting a clean inverse head and shoulders structure, the problem is we got this rejection off 444, and we are forming a bearish divergence, a big one on SPY. So if you look at the RSI and the MACD, if you just look at the levels where our signal line happens to be, and the RSI is very evident right over here. And if this gets a rejection, especially going into next week, there's a chance the market may cool off a bit and maybe start to just fill some of these gaps. Now, the thing about that is when you actually look at where the gap is on SPY, I mean, there's this gap down here all the way down to about this like 438 levels. There's a chance it could get a small correction next week and then try to bounce. We'll have to wait and see if we truly get a drop. What I would do is I would specifically look at gap support, which happens to be very close to where this 5 EMA happens to be. So very close to 442. If we break below it, if 442 breaks, we're going to be watching 440 and potentially it coming all the way down to fill the gap at 438. That could be a very interesting trade. But part of why I'm saying this is because of how next week is going to be structured. Next week, the market is going to be open for a much shorter duration of time because on Monday, in commemorance of the 4th of July, it's going to be just half a day. The market's going to be closing early at 1 p.m. Eastern time. So make sure you're prepared for that. And then on Tuesday, it's going to be July 4th weekend. The market's going to be closed again. That means that we only have like half a day of trading between Monday and Tuesday. Then everything goes back to normal for Wednesday through Friday. So I just wanted to note that there's going to be less volume in the very beginning, and there's not going to be as many buyers, in my opinion. I think it's less likely for that to happen as the weekend is coming up, and typically the market slows down a bit. There's going to be less volume. A lot of people may be going on vacation. I just wanted to note that. So that would be completely normal, and I would just be very careful when watching these levels. But that does not mean it's the end of the world. The market could always rebound later on. But I'm just going to keep this stance for the time being and just mention that the technicals are looking a little bit more bearish. But we don't have confirmation of the drop yet, so we're going to watch for that confirmation. The odds do favor the market cooling off a bit, though, because of the slower week and also because of this current formation. If anything, we will see what happens with news over the weekend. We'll see if there's any economic data to look out for, if we have like more Fed speakers or anything like that later on. We do have some speakers like Williams on Tuesday, and besides that, there's not much else. I don't see a speech by Jerome Powell, luckily. It's finally time we don't see Jerome Powell. It's been a long time since we've had free time without Jerome Powell, and the time has finally come. So anyways, we're going to just wait and see what happens going forward. We have a weekend approaching us, so I'm just going to keep this video very, very short. And just know the market is looking a little bit weaker going into next week, but it's not the end of the world. I'm not saying it's going to be a crash or anything too serious. It could just be a very healthy pullback that we may see with the less trading hours, the less volume, and the other factors like that. All right. So until then, we have a lot of time until the market opens again. Enjoy the weekend and do what you guys have to do. Market to the moon as the long term is still incredibly bright. And peace out.